for today's video, we're going to go over how to fill out Form 8829 on your personal tax return. And Form 8829 is used to report expenses for business use of your home. In plain English, this means your home office deduction. So if you use an office exclusively for your business, or if you use your office or a room in your house to store inventory or product samples, you can write off the expenses associated with that room on your tax return. And this is the form used to do it. And in 2013, they're actually going to make it even more simple than using this form. You're just going to be able to take the square footage of the room you use, multiplied by $5 per square foot, and that's going to be how much you can write off. So if you have a 200 square foot office that you use for business, you're going to be able to write off $1,000. Much easier than filling out this form. However, if you have to do a past year return, you're still going to have to fill out this form. Or if you think you can get more money out of using this form than using the $5 per square foot deduction, you can still use this form. So we're going to go over how to fill it out. Okay, so we're going to go down to part 1 here. What they're going to want to know is how big your office is versus how big your entire house is. So on line 1, they want to know the area regularly and exclusively used for business. So how many square feet is your office? So for this purpose, let's say it's 250 square feet. And then they're going to want to know the total area of your home, the square footage. So for this, let's say 1,000 square feet. And the reason they're asking those questions is because they want to know the percentage of your office versus your entire house, because that percentage is going to be what you're going to be used to decide how much you can write off of your expenses. So here it'd be 25%. Lines 4 through 6 here, it's if you have a daycare, if you use a daycare in your house. We're not going to talk about that today, so you can skip those lines. Go down to line 7, you're going to enter that 25% again. Okay? We're going to go down to line 8 here. Line 8, they want to know how profitable your business is. So after you filled out Schedule C, which is where you report your business income, we also have a video on that. You're going to want to know what the profit is. And the reason they want to know that is because you can only write off home office expenses up to the profit in your business. So if you made no money in your business, you cannot write off any home office expenses. If you made $500 in your business, you can only write off $500 worth of home office expenses. So for these purposes, let's say you made $5,000 so far. Okay, we're going to come down to lines 9 through 12 here. And for the rest of these, they're going to divide it into 2 columns here. You can see column A is direct expenses, and column B is indirect expenses. And this is an area that a lot of people get wrong when they try to fill out this form themselves. So to tell you the difference here, direct expenses are expenses that you had directly with your office. So if you had to do a repair directly to your office, if you had to drywall your office, that'd be a direct expense. An indirect expense is something that was applied to the entire house, and you're only going to be allowed to use the portion of your office. So in this case, 25% of that cost. So if you had to put a new roof on the entire house, you can write off 25% of that as a home office expense, because 25% of the house is your office. Most of your expenses will fall on the indirect expenses. You don't want to make an indirect expense a direct expense. It's going to make your expenses way higher than they should be, and it's going to set off a huge red flag. And I should note that this form also kind of is a red flag. People kind of abuse this form or fill it out wrong and incorrectly. So you want to make sure it's done right, because they're going to look at it. Okay? So we're going to look at line 9 here. It's called casualty losses. So this is anything that was destroyed by like fire or theft, anything like that. So if your entire house burnt down, the costs that you had minus what the insurance gave you back would be an indirect expense. If just your office burnt down, the same thing would apply in a direct expense. Okay, so we're going to say there's nothing there. The deductible mortgage interest, this is almost always an indirect expense, because you almost never pay a mortgage just on your home office. I mean, I guess maybe if you made an addition to your home for the office, but for most people this is going to be an indirect expense. You're going to put the total interest paid on your mortgage, we'll say $10,000, and then you'll come down later and you'll just take 25% of that. Same thing with real estate taxes. The total amount you paid will go under indirect expenses. All right, then you're going to add lines 9, 10, and 11. So in this case, it'll be $11,000. Okay. And then line 13, you're going to take line 12 and multiply it by the percentage of your house used for your office. So in our case, that is 25% times $11,000, which comes out to $2,750. All right. Line 14, you're going to add line 12, column A, which is a total of your direct expenses, and then you're going to add line 13 to that. So we have no direct expenses, and we have a total of 2,750 indirect expenses that you can take. Okay? Line 15, you're going to subtract line 14, which is your $2,750, the amount of your indirect expenses you can take, and you're going to subtract that from line 8, which is your profit. So they want to know how much you have left of home office expenses you're allowed to take after this. So here that would be $2,250. So that's, again, just how much you have left to take. Excess mortgage interest, don't worry about that. Insurance, this is the homeowner's insurance. You can write off the portion of your home office. So again, this would be an indirect expense, say $1,000. Line 18 is rent. If you don't own your home and you're renting a home or renting an apartment, instead of putting a mortgage up on line 10, you're going to put your total rent that you pay as an indirect expense on line 18. All right? Repairs and maintenance. Again, this is the big one that you have to distinguish between whether it was just done to the office or whether it was done to the entire house. So if you had to make a repair in just your office, that'd be a direct expense. If you spent $1,000 repairing the drywall in your office, you can write that entire amount off. But if you spent $5,000 putting a new roof on your house, you're only going to be able to take 25% of that. So let's say that there was $1,000 in home repairs for the year. Okay, utilities. These are the utilities for your entire house, because typically you're not just going to have utilities on your office. So the utilities you pay for your house, and typically these will mostly include electric and gas, all right? So you're going to take the total amount you paid in your utilities for the year, and you're going to be able to take, in this case, 25% of that. So we'll say there was $3,000 paid in those utilities. Other expenses, if you had any other either whole home expenses or just your office expenses, you list them on line 21, okay? And then line 22, you're going to add lines 16 through 21. So here we're going to have $5,000. All right. Here we're going to multiply line 22, column B, by line 7. Line 7 is just the percentage, our 25%. So you're going to take the $5,000. You're going to multiply it by the 25%. So here we're going to put $1,250. And out of that $5,000, what that's saying is you're allowed to deduct $1,250. All right. Carryover of operating expenses from 2011, Form 8829. So if last year you weren't allowed to take all of your home office expenses because you didn't make enough profit, you're allowed to carry it forward to the next year, and this is where you'd put it. All right. In this case, we'll say there is none. Okay, line 25, add line 22, column A, line 23, and line 24. All right, so this is going to be $1,250. Line 26, allowable operating expenses. So we're going to enter the smaller of line 15 or line 25. So line 15, again, was just how much you had left that you could take. All right. Line 25 is the amount that you can take from line 16 through 19 through 21. Okay, which was $1,250 for us. So what it's saying is, what's more, the amount you're allowed to take based on how much profit you had, which is $2,250, or the amount that you're actually taking this year. In this case, the smaller amount is the amount that you can take in expenses. So that means you can take all those expenses, basically, is what it boils down to. Just a lot of language to get to that. All right, limit on excess casualty losses. We're not going to worry about that. Excess casualty losses, not going to worry about that. Okay, depreciation of your home. There's a whole section down here, part 3, that shows you where to get that. Okay, well, let's go through it real quick. Okay, so enter the smaller of your home's adjusted basis or its fair market value. Okay, so this is the total value of your house. Let's say your house is worth $200,000. Okay. Line 37 is the value of land included on line 36. So you're not allowed to depreciate the land. So basically you have to figure out how much your land is worth. If you can't find that easily, a safe bet is to just take 20%, or 10 to 20%. Let's say 10% in this case. So your land's worth $20,000 on this home. So that means you got to subtract that out, and the basis that you're allowed to depreciate is $180,000. Okay? All right. Line 39, basis of building, multiply line 38 by line 27. So here they just want to know what the percentage of your house is, of the value of your house goes towards your office. So you're going to multiply that 25% by the 180,000, which leaves 45,000 of your home value is attributed to your office in this case. Depreciation percentage. Okay, this one gets tricky, so we're just going to forego that. Basically, if you're going to use depreciation, you need to use either tax software or a CPA to prepare this for you. It's going to get tricky. So we're just going to go down to line 41 and say it came out to $500, all right? Your depreciation expense for the year was $500. So that came back on line 29, and you put 500. Carryover of excess casualty loss, again, we're not going to worry about that. Line 31 adds line 28 through 30. So for us here, that's just $500. Okay? Allowable excess, we're not going to worry about that. Add lines 14, 26, and 32. So line 14 was a 2750. Okay. All right. Line 14, line 26 was a 1250. Okay. And line 32. Okay, line 32 is just a $500. Okay, so we're at 500 there. So your total home office expenses in this case would come out to $4,500. All right. Casualty loss portion, we're not going to worry about that. Allowable expenses for business use of your home. Subtract line 34 from line 33, so it's just $4,500. And enter here and on Schedule C, line 30. If your home was used for more than one business, see instructions. So if you have more than one business, you're going to have to split these out between the business. In this case, we're going to say it's just one business. So you had $4,500 in business expenses. Your profit for the business was $5,000, which means you're going to be allowed to take the full $4,500, and it's going to leave you with a profit on your business of $500. So in this case, I mean, this was a huge business expense, $4,500. It's going to save you 15% on the self-employment taxes plus whatever your marginal tax rate is. So it could be a huge savings. It could be up to 40% savings. So that $4,500 could come out to an $1,100 savings for you in taxes. So this form's totally worth it. Again, they're going to monitor it, so do it right. It'd be a good idea to have a CPA do it for you, but if you want to do it on your own, here's how it's done. All right? If you have any more questions, feel free to email us. Hope this helped.